Home First Finance is the stock that we're looking at. Actually, the past 6 months were not too bad for Home First Finance. The stock is up about 13%. And, it was a strong quarter for the company. So we are going to talk to the management. The assets under management saw a good growth, net interest margins, asset quality was stable. Manoj Viswanathan, the MD and CEO of Home First Finance, joins us now to discuss the business. Manoj, good morning and thanks for being with us. I want to understand what's the outlook on the asset quality because it's been pretty stable this time. I mean, you've been holding your gross NPAs at 1.6%. How is the turf looking, and do you think this kind of stability in asset quality is something that you can maintain?
Yeah, overall, the asset quality, and the repayment culture in the country has improved over time. And post-COVID, we are seeing also customers becoming more serious about maintaining their track records. Asset quality should be stable, or it can only improve from here going forward. If you look at early indicators like the bounce rates, the early delinquency, etc., for our company and for overall industry as well. It's showing improvement. So we are feeling quite positive about the asset quality.
Hi Manoj, good morning. Manoj, what about the AUM growth? It was quite robust in the first quarter, and I think the outlook as well is fairly positive. Could you tell us what kind of a growth number are you looking at for this year? And also LAP as a percentage of the book, that's gone up. Could you tell us where do you see this number stabilizing at?
AUM growth has been strong, so we have been clocking 30% plus, on an annualized basis, and we expect the same kind of growth this year also. If you see the first quarter, also it has been fairly good, and it's all a function of how much we are disbursing. So this year, the overall disbursal run rate is running at about 4,000 crores. So if you kind of calculate back, we are expecting a growth of about 30% this year, and next year also we expect a similar kind of growth in AUMs.
Right.
Yeah. So overall strong growth as such.
So how much would it contribute, LAP, as a percentage of your total book? If you could give us a rough number.
So coming to LAP, currently we are disbursing about 15%. 15% of our disbursal is contributed by LAP. So on the AUM, we are seeing only 12% because it's just that is just a catch up. So at some point it will catch up to 15%. So that's a figure that we are comfortable with for the LAP contribution, and we intend to keep it at that level.
Manoj, hi, good morning. Investors, especially people who invest in financial services stocks, are pretty excited about the Home First story. And I think it's been pretty evident. Just you said 30% we should be able to grow. You've earlier on occasion when you joined us said that we should be able to grow 30-35% for a number of years. That runway is there. I just wanted to understand: is there is there a number where you get to and then it kind of starts to slow down, gets a little more tricky? Say for example, you get to 15,000 crores. Is after that it kind of gets a little more trickier, slower, and how does that? Because the earlier book also starts to run down, right?
That's true. So the running down part, the erosion of the portfolio is kind of fairly predictable. Generally, for most housing finance companies in this segment, it's in the region of between 15 to 20% a year. So that is a predictable number that does not change over time too much. So it all boils down to how much you can disburse, and that is a function of your distribution expansion as well as market share growth. So as far as market share growth is concerned, there's a lot of headroom for companies like us because currently we are at about a 2% market share. If you look at the entire country, so getting to a 5% is the first target, and probably a little higher after that. So that gives us a runway for growth, maybe for the next at least 5 to 7 years, and which is why we are fairly confident of maintaining a 30% or thereabouts kind of a growth.
I know they are completely different segments, and but I just want to kind of pose this to you. So we had the Piramal management with us at a panel discussion, and they said that, well, on the unsecured side, we are actually months away from a bit of an issue. Unsecured personal loan, consumer loan segment. Now, housing loans, completely different. Defaults are very low, historically speaking as well. But is there any takeaway from that to the segment that you are in, Manoj, as you see it?
So this is something that we have seen historically in the personal loan or unsecured segment. There are cycles, and there are times when there is a lot of dispersal euphoria, on growing the book, etc. And then there is a cycle. Customers are not able to repay. We have seen that. As far as housing loans are concerned, the best test for the resilience of the portfolio was COVID itself, where we actually saw customers prioritizing the home loan, above everything else. So even at the peak of COVID, our NPS did not climb too much, and we also saw a very quick recovery from there. So given what we are seeing on the ground, customers are actually becoming far more responsible, as far as their home loans are concerned. We have a lot of stories on the ground where customers are coming back and making almost 8 to 10 payments which were overdue in order to retain their homes. So on the home loan side, we are actually seeing, far more responsible behavior from customers.
Okay. Just two quick questions from mine before we let you go. You said a 30% growth is what you're hoping to maintain in AUMs, right? I mean, that's solid, given the kind of market share that you have, just about 2%. So I'm sure there's leg room to grow. But are you entering any new geographies, And what are the demand trends now like in the home finance market?
We are already present, in 13 states in the country, which actually contribute to about 80% of the business in the country. So at least for the next 5 to 7 years, we intend to continue in these 13 states. There is still a lot more, depth of distribution that we need to achieve. So currently we are present in about 200 cities. That number needs to go to about 400 cities, which will itself take us about between 3 to 4 years. As far as the demand is concerned, it is coming from all parts, at least across all these 13 states.
Yes.
And as far as our strategy is concerned, we are looking at West and South, penetrating West and South more deeply initially for the first 2 years, and then making inroads into the northern markets.
Okay, very quickly, Manoj, before we let you go, NIMs are holding above that 6% odd, but cost of funds would have gone up. What's the trajectory on this, very quickly?
Cost of funds went up last year, and so we are expecting now the cost of borrowing to take a pause because looking at the trends, and looking at what RBI is saying, we are, at least this year, we are expecting that to take a pause. So the NIMs, we should be able to hold the NIMs at least for the next 2 quarters.
Okay, all right. Thanks a lot, Manoj, for stopping by and filling us in with all those details. Wishing you all the best for the remainder of the year and have a good day as well today. Well,